Let's begin, though, with the market reaction to the jobs number, Jim. We mentioned the better print, but some revisions, household surveys getting some eyeballs.
Yeah, I think that's absolutely right. That's the story. The revisions offset what you're seeing, and that's why the interest rates immediately jumped up and then they backed off a little. I think it's interesting. Government, 52,000. That was a big delta. Healthcare has just been strong, 38,000. But we have construction that's up a little bit. And then leisure and hospitality, which have been red hot post-COVID, is unchanged. Retail is okay. And then I find that average hourly earnings, they're pretty much the same. This is not nearly as negative as when it first hurt. Negative meaning interest rates shoot up.
Right.
I think when people pulled apart the numbers, they said, that's a little too hot, but let's take off the 6 rate cuts. Let's go back to 3 rate cuts.
Right. Maybe LFPR is the most concerning. Why would we have participation drop by the most since January of 21?
I don't know. Sometimes you look at these numbers and say, okay, look, I got to learn more about it. I don't want to cuff it. I was surprised at that.
Yeah.
I was surprised. Look, I think, Carl, in the end, there was just this camp which just said it's going to be really weak, and then there was this camp which said it's going to be weak. But there wasn't a camp which just said it's going to be okay. And so the okay camp is now scrambling to sell Mag 7. So Mag 7. I mean, it really is like that.
Yeah.
I mean, the OK camp just says, wow, I can't stay in the Mag 7. I better go into the there was a great piece this morning. It got removed from the journal. It was like the amount of money going into cash is extraordinary because cash is extraordinary. You get like 5. You can make a lot of money with 5 and not have to worry. Of course, if they cut rates immediately, they would, but they're not going to.
The flow data today is interesting. B of A, biggest purchase of money market funds since November, another $57 billion, right?
I thought that was incredible. Very little in stocks, a little more into bonds, which, again, that's just Mag 7 sell, buy, rest.
So do you think the jobs print is a push, more so to speak?
I think it's more of a push than people realize. I think that what we're going to do is get away from the camp, which says there's multiple cuts, which is good because that's not Powell's camp. I don't know whose camp that was.
It's the wishful thinking camp.
Yeah, wishful thinking camp. And those people, they should just go somewhere else. They should do some other game. I mean, they really shouldn't. I mean, you got to deal with reality. The economy is not that bad. And the only thing that happened is we got rid of higher for longer. Then we had the job plot. I mean, it's like, geez, we had these jolts. And I find this up tiresome because all they're really saying is, look, if it's weaker, we're going to cut, but we don't want to cut too fast because that's the big mistake you can make.
36 months of job growth.
Right.
I think 20 plus of sub 4% unemployment as we stay at 3.7. I mean, it's 2.7 million jobs added in the full year.
It's just it's a great economy, and there's nothing you can do about it. It's a great economy. And only the people who thought that it was a super weak economy are surprised today. But they are surprised. And I just think that it's not in a decel mode. We're not in deceleration mode. We're just in but it's from a very good level. I wish that we didn't. Sometimes I wish we didn't do what we do, which is talk about stocks, because this is a sign of an economy that's the best in the world. We're the best in the world. We have less inflation. We have more job growth. But we're not. We're in the stock business. And in the stock business, you sell Apple on that.
Yeah. Well, the tape never ends, Jim, and we got to talk about it as it runs. We are going to get CPI.
Tape never.
We're going to get CPI next week, though, and given the Eurozone inflation today,
2.9,
there will be some hand-wringing about sort of month-to-month rebounds in year-on-year rates.
We had a very strong. I like the revision down, but we had a very strong online market. We saw the Amazon numbers.
Oh my gosh.
I know.
30% of all orders in the final days of the season.
It's funny. It came out, and I was joking around my staff. I said, "Oh, 30%. How much will Amazon be down?" I thought it would only be down 2. It was like down 3.5. This market hates those stocks. So maybe today you get a rebound because people are starting to figure it out. But just be careful. The market likes people like new names. They like the industrials. They like Halmet, which is how I met my mother. That's an aerospace play. We've been using that joke. I really love it. It works every time I say it. But this is just a strong economy. And if we had the labor secretary on, they'd be crowing because they don't have to worry about the
We are going to talk, I think, to Lael Brainerd in the 10.
Hey, very smart and good person. That's good.